The metric for success is how many of you are actually looking at us and not at the screens, because usually when I do this, about 50 to 75% are looking at screens. And I'm frankly a little bit bored of it. So my new single crusade is to, whenever I'm asked to speak at a conference, and after a decade I do get asked to speak at conferences, it has been more than a decade on this circuit, I'm saying, yeah, I'll do it, but only if there's no moderator. So there's no moderator. You have 3 people. We're all moderating ourselves. We don't need a moderator to ask us questions. We were able to do that. 2, we don't have a particular topic. We've clearly thought about that, but we're going to let this go where it goes and see what happens. And we're going to try and be, look, it's not really the time to be ultra provocative, is it? Because we're all kind of smarting after a tough week. But we are going to try and get to some real juicy topics. And hey, you got 3 very opinionated people here, so let's let those opinions fly. 3, we need to get you guys involved somehow. That's the only way to get you off those screens, although I'm pretty sure we're already at 50%. So we're going to ask you some questions.
They're day trading.
Maybe
they're
day trading, yeah.
It's not going to help.
Maybe we should be worried because the market's moving. So we're going to ask for some shows of hands in certain times and just kind of maybe ask you guys some questions and see how we go. So we'll do a very quick intro first, 30 seconds each. So I'm CEO of Deu X Capital. We're a $1 billion investment and operating company. So we have legacy, mature businesses in foreign exchange and software. We have VC stakes. We have fund allocations. But we also build new companies. So some brands that are associated with us, Solstice Labs, Core Prime, Trade Locker, Apex, Alpha Lab 40, all in our stable. And so we're very active in investing, long-term, short-term. We're an investor and an operator, and that's who we are. Stephanie.
Stephanie Ramezan, founder and CEO of the Crypto Collective. We are a strategy, growth, and communications firm that sits at the intersection of digital assets and traditional financial services. We work with both crypto-native companies in helping them enable adoption, growth, and we do that by helping them build credibility when it comes to institutions. And then we also work with traditional institutions who perhaps need a little support. They don't necessarily have all the capabilities in-house when choosing to engage with this sector. So I help people when they need to go to market, explore things, and not blow up their own credibility, their own balance sheets, risk, and be able to explain things to their boards.
Hi, everybody. There must be a lot of people who need that right now.
Yeah, I wish I could clone myself a few times.
Credibility and boards. Okay. My name's Lex. I'm a co-founder of Generative Ventures. We are an investor in robot money. How many of you here are robots? So at least one robot. Do you need money? I think so. So our investment thesis is around the machine economy. As more and more of you are actually, who's running like Clawbot? Anybody running a Clawbot? Anybody use There we go. I know you are running Clawbots very quickly, probably. Yeah. How many of you have heard of ChatGPT? God, this audience. Oh my God. So when AI is generating more and more GDP, which obviously it is, because if you look at the stock markets, nothing is worth anything other than the robot companies, broadly speaking. They need financial systems that are fit for purpose. We at Crypto need to convince ourselves that we haven't wasted the last 10 years, and as a result, we want to convince ourselves that crypto is the right financial infrastructure for the next generation of economic growth. So Generative Ventures is trying its best in the intersection of crypto, AI, and fintech.
So let's do a level set, right? I know the day, 19th of March 2015. That's the day I discovered Bitcoin and the day I bought my first Bitcoin. When's your genesis moment? How far back do you go?
I'll have to ask my friend Sean in the audience. He came to me and said, Stephanie, do you want to build a bank? So, sure. Like, yeah, we're going to serve crypto people. Okay. I think that was March 2018-ish, maybe earlier, end of 17. So that was my genesis moment.
2018, you've got to be earlier, surely, vastly.
Yeah, no, I've made a lot of bad decisions. I bought my I bought a Bitcoin. I bought half a Bitcoin. I got my now wife to buy me half a Bitcoin for my birthday in 2013.
So romantic.
After going to a San Francisco conference, which was a fintech conference. I was building a robo-advisor, and I went to this fintech conference in San Francisco, and it was like this, but cooler. Actually, I like my joke. That's a good joke. So I went there, and I was like building a robo-advisor. I was like, I'm on the cutting edge of fintech in 2013. The moderator asked the audience who had a Bitcoin. About half of the people raised their hand, and I didn't. And I felt really shitty about myself. And then also at that conference, I met the founder of Doge, and he hated all of it and continued to do so. And he actually doesn't have a lot of Dogecoin. Anyway, so that's when I bought my first Bitcoin. I joined Consensus in 2019 when I had given up on fintech and thought crypto was the future.
When that was the case. And mine was, I was out with a hedge fund on the West Coast doing the classic sort of, it was a Swiss hedge fund. So everyone took their tie off, and that was our nod to being local, being cool and groovy. And we went to Silicon Valley. But we met with Coinbase and Ripple on the same day, the 19th of March 2015, and I went from having no idea what blockchain was and Bitcoin in the morning when I woke up to owning one Bitcoin at $215 by the end of the day. Yes, I sold it long time ago, so never quite made that one right. So, what about you guys? Put your hand up if you discovered crypto in 3 years or less, 3 years or more rather, I should say. So, if in the last 3 years, more than 3 years you've known crypto. Let's just see what we've got in terms of, all right, so that's pretty good. All right, 5 years, put your hand down if it's 5. All right, now we're thinning out. Let's go back to 10 years, so that's 2016. Anyone pre-2016? Okay, what about pre-2013?
You're still going to conferences.
Wow, you've been on the circuit for a while, mate. Anyone, what year are you? You're the last man standing. 2010. Anyone earlier than 2010? All right, so we've got the whole spectrum, but I'd say most of us have been in it by the sounds of it for like five or so years. So this isn't a newbie crowd. Why don't we start and talk about the market? That's all we really care about. It's been a hell of a week, depending on, regardless of if, we have, as I mentioned, we have companies that we're building. We are an investor, and as an investor, we're pulling back. We're just sitting on liquidity. As an operator, we're creating more runway in our portfolio companies because you cannot ignore the dynamic here, and you have to assume the worst and kind of prepare for that and then hope for the best. And that's kind of our vibe. But let's kind of talk about this week and the markets and how we're feeling and any observations about it. What are you thinking, Stephanie?
Groundhog Day.
Yeah.
Very much Groundhog Day. You think, I'm sure all of us on this stage knew this day was going to come again, and we want to be optimistic, of course, and I still am very optimistic. But with every downturn, with every cycle, I panic less and less. People around me panic, but I don't panic because it's the nature of the beast, and there are still some real green shoots coming up. And there's a lot going on, right? It's not just crypto. Of course, people were hoping that crypto would stand up better than other assets, and we get the analogy to digital gold so much. But I think, for me personally, that analogy, yes, if you zoom out at a very high level, Bitcoin, gold, but people aren't really taking into account timelines and real value and inflation adjusted, right? Gold was not an overnight success. It hit its peak somewhere around 1980, and then it took, 45 years to get back again. So people are just thinking, if I bought gold instead of crypto, I would be retired and on my yacht by now. That's a very simplistic, very superficial way of looking at things. And it's going to be a choppy time. It's going to be very choppy. I understand what's going on in the US. I understand why there's a stalemate now in terms of what's happening with the Clarity Act. Of course, the banks do not want us to be earning yield on stable coins. That would be quite cannibalistic to an institution that's held up for quite a while. But I could elaborate, but I'll hand over to Lex.
Yeah, I think the market's down. Yeah, that's...
And?
Yeah. So there's a lot of people that are like, oh, it doesn't matter because infrastructure. I think it does matter, not because we all have, like you, huge Bitcoin balance sheets from 2010, but because a lot of the people who, sort of like the pattern that I've seen is that people come into the space and they say blockchain. So, not Bitcoin, not DeFi, not whatever, blockchain, let me go apply it to my business. Then you spend, 2-3 years doing that and you're like, oh, right, that's maybe not that. I can't sell it to traditional customers. Let me go and find crypto native customers. And this is generally sort of the right motion, right? So if it's the internet boom, you want to be Google, you don't want to be, you want to be Amazon, you don't want to be Walmart. I mean, eventually you want to be Walmart, but you don't want to be Kmart and Popmart and S-Mart and M-Mart and all the other marts that are now dead, right? So it's much more fun to build the native thing, the internet native thing in Web 2 than it is to take the pre-internet thing and transform it. Similarly, for financial services, it's way more fun to generate a $40 billion market cap of Hyperliquid than it is to to pick on you, transform the SIX exchange, right? They wanna, but they don't wanna. Whereas the crypto native people do. It's easier to go into the frontier in the frontier way. And so everybody starts with this half foot in, half foot out. I just like stable coins because stable coins are stable and they're made of dollars. It's stable coins are just tokens. You just put a bunch of dollars into the tokens instead of the other thing. Your ICO from 2017 and your stable coin, same thing, token. It's a hyperlink pointing to a financial asset. So people kind of go through this thing and then realize actually the customers are all on chain. I want to sell to the people who are on chain. And this is, I think, where the real crisis of 2026 is. I think by continuing to create not this volatility, but rather the precedent, fraud, crime, market structure issues that have led us to this again, we are robbing ourselves of consumers, on-chain consumers, who would want to buy from us, things denominated in stable coins. We're robbing ourselves of employees who want to be paid in stable coins. We are destroying the small businesses all over the world that said, okay, I'll accept crypto. Either by tanking the assets they have in their treasury or by destroying the payment processors they're using who had 1.5 years of funding and are now dead. So I do hate where we are again. I think there's a lot of stuff in crypto that needed to be cleared out, which is getting cleared out. But I feel that the price we're paying is pretty high.
Yeah, you said Groundhog Day. It's been 11 years almost, and yeah, there was 2017, 18. That felt a bit rough. 2022. Tail end. I remember sitting, I was running Europe for Galaxy with Mike Novogratz then, and you've got the 30-year-olds on the desk who are losing their minds because they've never seen such volatility and this looks really bad. Well, I was 32 during the great financial crisis. I'll show you losing your mind when there's actually a crisis and not just a little crisis in a small asset class. So these days it's water off a duck's back. And the interesting element is, well, how's everybody reacting to this? So the other thing I want to pick up on is, you mentioned about market structure. I think the thing that we constantly forget in crypto, and this is an opportunity, right? This isn't a moan-up, this is an opportunity, is the market structure needed to support a functioning market, a multi-dimensional functioning market with derivatives and with spot and multiple exchanges with the right liquidity and with credit and credit formation and yield, etc. This doesn't quite exist yet. Look at the collapse of the basis. How many of you are smarting because the basis collapsed? A lot. I suspect a lot of people in this room, the one way or another, the business model might have been predicated on that being consistent, and then it goes away. What do you do now? And that kind of leads us to this next phase. What is it that we need to fill these holes? We'll talk about RWAs in a bit. I think they're yield-bearing assets on chain, because that's now what people need. But this is the opportunity, right? If you can ride through this moment, this is what we're talking about with all of our portfolio CEOs right now. You gotta stop. You got to take a step back. This is a serious situation. There's no stress. Don't get stressed. That doesn't help anybody. But be real. This could last. We could stabilize it in the 60s.
When you tell them not to be stressed, are you yelling?
I try not to, but sometimes you have to. Don't be stressed. You know what I mean? Like there's no point getting emotional about stuff like this, but it's tough if you haven't been through it a bunch of times. But the whole idea is, how are you going to survive? Because everybody who's going to make money is going to make it because they got to the other side with runway when the tide shifts and it's time to go out and up to the right again. You've got to be ready for it. You're going to see a bunch of think of all the 10-10 sort of casualties that are only starting to become clear now because some of those results are only coming out this quarter. You're going to find this in another quarter. People are going to get carried out on stretchers. You're starting to hear rumors of people getting carried out on stretchers like that. This is not a good situation, but it's a phenomenal opportunity. Like if you're an investor, if you have capital, or if you have a startup, you create that runway to get to the other side. That's to me is the critical message of the day. It's like, sure, there's all kinds. We can talk about the why, but what are you going to do to get through and survive to get to the other side? So we mentioned RWAs. Why don't we talk about that? I think all of us have experience and t-shirts, and let's talk about this decade-long journey. Where is it going? Is it real? What's this RWA thing?
Every year it's the year of RWAs, allegedly. So will 2026 be any different? There's been so much theatre, and I just roll my eyes every time I hear someone tokenizing something that just does not need to be tokenized. And there are very few use cases that I've seen that really make sense. One very provocative one that I've talked about before is physical uranium. And that's a very divisive topic. You say uranium, you think nuclear bomb. It's not just about nuclear bombs. And yes, there will be people that are wanting to enrich uranium for that exact purpose. However, let's talk about AI and data centers, very, very present right now. Where is that energy going to come from? Where is that secure baseload? Where is that clean energy coming from? And uranium is critical. And I think what's so interesting about uranium, it really proved itself that it's not cyclical, it's structural. We had a really great example of that mid last year with the US tariffs. Copper tumbled, aluminium follows, but uranium held strong, because it wasn't just about cyclical market sentiment. And this is a commodity that people have been locked out of for a very long time, very high minimum tickets, a lot of friction, and even the large institutions who are trading, massive price opacity, very difficult to access. And so this, for me, made sense as an actual use case. Now, like I said, it's been a very divisive topic, and there's had to be a way to help the founders of this project frame it and articulate and be able to talk about it in a credible, institutionalized way where it doesn't, is this a crypto project? Is this a commodities project? It's both. And this is where I think we need to see the market going with all RWAs. It's not, is it one or the other? It needs to come together. And it's a mindset shift in a lot of founders. I'm sure you both see it. People within crypto are waiting for institutions to accept where crypto is instead of realizing what the reality is, waiting for big institutions to bang down their door, to adopt their networks, to invest in their companies. That's not what's going to happen. We have to meet the other side where they are to an extent.
RWAs?
Yeah, what's the deal, dude?
What's the deal? So there's like two tracks I have for thinking about it. One is practical and one is the science fiction track. The practical track is really not fun, and the science fiction one is probably horrible as well. So so now they're RWAs. They used to be security token offerings. Then they were, enterprise blockchains. Then all etc. I think the reason that they haven't exploded in usage outside of regulation has made it difficult to have markets, right? So blockchains are market venues, and let's say I want to buy uranium, I want to sell my whatever dog coin, I want to launch my dog coin, and then I want to rug my dog coin, and then I want to buy some uranium, right? That's what I want to do. And I can't, because there's some guy who's like, I'm not going to sell you uranium token unless you KYC for $5 million, and bring your institutional paperwork and fax it to Switzerland where a priest will stamp it with the Bible, right? Like, any of you, I think it's like the truth what I'm saying, right? Like, you do have to have the Bible and you do need the priest. I think I've lost track. So the point is that is from a regulatory perspective, there are barriers, and the barriers are like, we can't super help North Korea buy some BlackRock funds, right? And so there's a market structure problem. But if we assume all of that goes away, the reason I think RWAs have not worked since 2017, 18, 19 is that generally we've been just putting really bad products on chain and then wondering why nobody wants to buy them. It's like, anybody remember the tokenized violin from 2008, 19? At Consensus, we had people who showed up with breweries and cars. It's like, hey, I'm going to be the first hotel in Iceland. You can own. We're going to buy this. Like, we're going to put a hotel in a volcano. I don't want to buy that. I want the dollar. So if you look at RWAs, there is number one success story is the dollar, because that's the best asset. The second best asset is treasuries. So there's a whole bunch of dollars, and then there are some treasuries. And that's what's worked, because those are good products. Most of the other products that have been tokenized are there because nobody wants to buy them. So banks are like, those crypto people, they sure are dumb. They're going to buy our bad products. Let's tokenize them. And I'm sure you know this story very well. And crypto people don't want to do that. They want to buy, rug pull dog coins. So that's kind of story number one, is if you're going to tokenize stuff that is a good product that people want to buy, and generally speaking, those are the most liquid and interesting and straightforward products, right? So if I'm in China or in Latin America running a business, I need to figure out my treasury, I'll disagree well, I don't know the value proposition, but they probably don't want to buy uranium. They probably want to have a money market fund with BlackRock managed yield on it. So that's kind of the RWA story. And I think we're just going to see asset classes based by market cap come on chain, because roughly market cap equates to how good the product is. And then I think there's the science fiction story, which is a little bit more permissive. And it goes kind of like this. So if you really zoom out, what's happening to people is to humanity is that we're slowly getting uploaded to the digital realm. Right? Like all the science fiction of people's minds getting zapped or brains getting uploaded, or, like we're not feeling it, but if you look at the reality, like all of our activities are digital, and the digital exhaust of our activities is being spread through the internet. That is then being used by algorithms to reverse engineer us and create, mirrors of us that are algorithmic through negative space. That has been used to create the other mirrors of us, which are the LLMs and the AI robots and the 2 or 3 people that are running Claude bots, right, that are expressing our continued thoughts and interests. And so slowly we're kind of getting boiled and removed into the internet, into the digital realm. There's more and more sort of physical manifestations of this, right? So devices that measure our health, our physical presence, all of that is sort of getting up there. Our financial activity is a continued extension of that, right? So in order for our economic activity, which is what the AIs are going to do for us, to continue to grow and become digital, similarly, all of our financial services around that have to be digital as well. So the answer to what should be tokenized is everything. Every single thing should be tokenized. Today, we're like, what's a good or bad thing to tokenize from an investment perspective? But in the long term, the answer is absolutely everything has to be tokenized and digital, and in the substrate of what is Web3 or Web4, in which you have a population of robots, and then, of course, everybody gets melted down into gray goo and shot around the sun into a Dyson sphere. But that's looking forward a few hundred years or decades. So I think it's hard for me, because a big part of me is like, all of it, tokenize all of it. Not just sort of like your tweets on base or whatever, but all of it. And that will accelerate us towards the financial singularity. And that's interesting and novel, even if it's terrifying. And then the practical side is like, well, just the money market funds, I think, is the right answer.
So I have to be really careful on this topic, because I've been doing it for so long that I get very jaded, believe it or not. And I actually, for fun, looked up this morning The first article that was ever published that had anything to do with me in crypto was the 20th of January 2016, when R3, which I was the CEO of the lab at the time, we managed to get 40 banks, this is JP Morgan, Goldman Sachs, Morgan Stanley, etc., to create a node on public Ethereum and join together. That's all we did. And actually, most of the guys in the banks weren't able to do it from within the bank. They had to go to the coffee shop and do it because they wouldn't get through the firewall. Like, this actually happened, right? This is almost exactly a decade ago. Now, all of those banks, as some of you may know, paid a lot of money to go and figure out what would be tokenized, right? We were talking about tokenizing bonds a decade ago. There's nothing new about tokenization. That's why sometimes you get jaded. And the thing is, here's where I've sort of landed. This is a relatively recent view of the world. And by the way, as you said, Lex, I was CEO of Six Digital Exchange. Like, I've been right in the thick of this one. I have the T-shirts. And the thing that's dangerous about markets is they're so big. You have to have that grand ambition to make that big impact, to make an entire asset class go natively digital. And everybody in this room knows how hard this is. And now we've got a decade to show how hard this is. So what do you do if that's the fact? Well, you have to rely, and I go back, actually agree with you, Lex, you've got to find the thing that really matters. So what matters today? And I think this is that people have talked about, you've heard CZ talk about it, what are the big items for this year? I think tokenization, it's not really tokenization, I think it's yield. It's yield-bearing assets beyond the money market funds. There's got to be the next step. The big disconnect in crypto, and I think this is foundational and fundamental, is that crypto hasn't quite figured out term structure. We all want liquidity and we want it now, but that's not how markets work. It's not how they've ever worked, and it's not how they're ever going to work. You're not going to get high-yielding assets with a better risk-return profile that you can liquidate really, really quickly. Like, that is just not a thing. However, this problem has been solved in traditional markets. There are ways to go and do this with market makers and financing, and there is a market structure that can solve this. Now, where's the demand coming from for this thing that needs yield, therefore it's likely to be longer term structure, therefore it's going to have a higher risk profile, therefore it's going to be lower liquidity, right? It's coming from, and we've got Solstice, we've got 300 million of TVL, it's a yield-bearing stable coin. As I mentioned, we invest in the basis. Basis has collapsed. I'm now at 3.5% on the basis, where the assumption was that it was going to be 8, 9, 10 plus. Okay, we're smarting. We can't pass that yield through. What doesn't exist today is an alternative to that basis. There's nowhere else really, apart from putting it in money market funds, which doesn't really get you very far, to go and get that yield. So the next block of assets where there's an actual demand today is for that next step of yield, because everybody needs it. Because we're not going to spend the next few years relying on this basis to be where it needs to be. You've got to think beyond the broader market structure. So what we're trying to do, I'll bring it back to AI and we can finish on this, the data centers. There's a tried and tested route in traditional finance for how you finance that, and you take those and you turn them into yields. And you can either go and finance and use the GPUs and the buildings as collateral, or you can securitize the cash flows. And this is the part where I think we're going to get to. You can securitize those cash flows, put them on chain, get yourself an 8 to 12% yield. I think that's the sort of product that will fly, because everybody in our space, we can get our head around that. Then you only need to solve for your liquidity. But hey, if you can get it down to 30 days, that's not bad. It's just crypto hates 30 days. We really hate it. It doesn't feel right. 7 days is hard enough. You know what? 30 days is pretty good if you're getting that kind of yield, you know? So look, we're over time. Hopefully this format works. We're testing it out, a little bit more vibrant than usual. Really appreciate you guys listening. You're all watching me now, so that's a good sign. Thank you so much, guys. Thanks to Lex and Stephanie.